Thank you very much, and thank you very much for having the opportunity to present to you a sector's view. And I'm really proud to present to you a panel with fine panelists coming from esteemed organizations, institutions of the financial sector. We have Cheryl Venable, the Chief of Payments Operation at the Federal Reserve Bank. We have Ron Green, being 10 years the Chief Security Officer of Mastercard. We have Cheri McGuire, the Chief Technology Officer of SWIFT. Rafael Garcia Oliva, the ECB Deputy Director General in the Directorate General Information System. And Sergej, the Chief Security Officer, EMEA, from Palo Alto Networks. So industry, private sector, public sector, and 2 central bankers. And in fact, the reason why risk management is a Champions League in this sector is since the money is there. And if you look at the last Juniper Research report on online payment fraud, we expect from now to 2027, $350 billion in fraud created in that sector. And that's only the direct damage, not the unreported one, and not the indirect costs like reputational damages, which is, of course, something where we fear a lot when it comes to financial institutions. The increasing financial damage also meets a changing financial system. According to the McKinsey Global Payments Report, also published in 2023, we are at the beginning of a new tech-driven era. And in fact, that is true in the financial sector, who may have a paper area with checks and a lot of paperwork. It moved into a plastic area, according to that report. Will move into account-based rails, and we'll talk about instant payment a lot here in the panel, and eventually end up with more technology and the global token economy that has been announced by some central bankers even as a visionary of the future of money. So let's jump into it and let's discuss together trends, opportunities, risks, mitigations, and learnings. And I would like first to refer to you, Cheryl. Cheryl Venable, Chief Payments Officer at the Federal Reserve System. You are also responsible for FedNow. And that is a service that the Fed launched just last July, based on new technologies, a new business model. Can you share with us what is this about and what opportunities do you see there?
Sure, and thank you for having me on the panel. Let me just provide, before I answer your question directly, let me just provide a little bit of context for those of you who may not be familiar with what we do within the Federal Reserve Bank and our financial services responsibilities. So we provide financial services, clearing and settlement services to 9,000 plus financial institutions in the United States, anywhere from check processing all the way up to now our instant payment service. So think of check processing, automated clearinghouse settlement, and then our large value wholesale systems, our RTGS, our Fedwire funds and securities, and our national settlement services. So on a daily basis, we move about $5 trillion, just to put it into context. Our newest payment system, FedNow, is an instant payment system that we launched in July of last year. And it really is a culmination of many years' worth of work to help the U.S. move to implementing and adopting an instant payments scheme within our country. Many of the countries probably represented in this audience today have instant payment solutions already operating in your particular jurisdiction. This is our domestic instant payments system that allows basically credit push, irrevocable payments to the receiver, and to really eliminate and minimize credit risk. We just announced this week we have 500 customers that have onboarded to that service. Clearly, I said we support 9,000 financial institutions. For our other payment services, we have a little bit of ways to go in that adoption, but it's a really good start, and we're really working on growing our network and volume. And really the opportunities are, from a use case perspective, our view is that instant payments is going to be an excellent rail to clear and settle payments that really need to be obviously moved quickly. So think about emergency payments or crisis payments or e-commerce payments over the internet, where you're really looking to ensure that you can move the money fast in order to accept the goods and or to pay a recipient that you know. So we also understand, as you introduce a new payment system, innovation flourishes. So we really also believe that that there is an opportunity that we're going to see innovation in this space that we probably haven't even yet identified, and actually the pie of payments will likely grow versus payments from a legacy system moving over to this new instant payment system.
Well, Cheryl, central banks are not normally known for innovations. How is that role perceived in the
Ouch. No, that could probably be true, but I will say that as we've moved into payments, we have been working very closely with the industry on evolving the payment system over the years, at least within the United States. And I do think this is true with central banks from across the world as well, partnering with the industry, with the financial organizations, with consumer organizations, with merchants and businesses, really to understand the needs of the users of the payment system to ensure that we are designing a payment system that really is going to meet the needs of everyone. And a few years ago, we revised our strategy within the Federal Reserve to really focus on driving payments efficiency and effectiveness end to end, meaning from the point in time that the payment is originated to the point in time that it's received, not just on the interbank clearing and settlement pieces. And working with the industry, it's really allowed us to innovate, leveraging new technologies and delivering this instant payment system, but also in how we do our work. So this is a 24/7 by definition, 365 instant payment system. So it has really changed the way that we work.
So the Fed is under transformation there, indeed. We'll come back to the risk associated with that later on. But let's move on to Ron. With all your experience in Mastercard, can you share with us the trends that you see in the payment sector in the last years and your observations related to opportunities, but later we'll come to risk as well.
Sure. So what I've seen and what we all have seen is just to move from like classical payment system, like even our card systems with the plastic card is that I'd call that a classical system. But we've moved on to more electronic payments in many forms. Our view at Mastercard is like no one wakes up saying, "Hey, I can't wait to make a payment today." But to provide them the ability to pay on whatever's convenient at the time with whatever method that's available. So I think most people think of us as just that credit card company. And they deal in plastic, but a lot of our transactions, especially COVID, was like an accelerator to move away from the plastic card being at a place, but card not present payments or digital transactions allowed over the internet, or contactless payments. We tripled the speed that we delivered contactless payment capabilities and operations to merchants and vendors that from the previous year. So, before we were delivering contactless, but COVID 3 times as fast. So we need to ensure that, we're securing the payment beyond just the card and the chip, but making EMV-like payments available, no matter if you're using a credit card platform where you pay later, or you're using a real-time payment. We have ACH rails, so instead you're going to pay now or you're going to pay in advance. So prepaid. Giving people the opportunity to pay with whatever means is available to them at the time, so that they don't have to wake up in the morning to think about how they're going to pay it. And once you have, a big thing for us is trust. If people don't trust payments, they won't use it. And if they don't use it, then that's the problem for us. So we've leaned hard into ways to secure the transaction. Let both the card holders or the consumer or the bank who owns either the issuing or the acquiring side to have trust or greater fidelity in knowing that's a legitimate payment versus a fraudulent payment. And part of that is also removing the you'd have a lot of payments that are declined because it's like an internet transaction, but increasing the fidelity to know that it's Wolfram versus someone else pretending to be you, giving greater confidence by the different scoring algorithms or information that we need to put on top of the transaction, so that the issuer and acquirer knows that the right thing is going to happen. So lots of advances in how payments are made.
Yeah, well, thanks for sharing. If someone at the bank wants to do a payment, they need your services, Cheri, since you are the CTO of SWIFT, which operates a global payment network, more on the wholesale side than on the retail, where we heard from Mastercard right now. But that's the interesting thing about that sector, because the infrastructure is actually built by public and private infrastructure and investments. What trends do you see in the market, and what opportunities do you see?
Sure. Well, I always like to not assume that everybody knows what SWIFT stands for, so maybe that's what I'll start with. SWIFT is the Society for Worldwide Interbank Financial Telecommunications. Kind of rolls off the tongue, that's why we use the acronym. We were founded 51 years ago by banks and financial institutions to provide a secure and verifiable mechanism, platform, by which they could transfer value cross-border using a system of codes. That's what SWIFT does and is at its simplest form. Behind that, of course, it's a pretty large infrastructure with all of the security and technology that you would expect that needs to happen. We are a global cooperative, neutral, global cooperative of 11,500 plus financial institutions, corporates, central banks, and market infrastructures. So I'm actually sitting with 3 customers today, the Federal Reserve, Mastercard, and the ECB. So we are really at the heart of the global cross-border payments and securities value transfer ecosystem. Just to give you a sense of the amount of value that we enable to be transferred, every 3 days, approximately the annual global GDP of $105 trillion traverses our network. So while we do not hold money, so the title of the panel is where the money is. We don't actually hold money, but we facilitate the value transfer of that money. For the future, there's a tremendous innovation happening. You see central bank digital currencies. We saw the first one come online in 2019. We see decentralized finance. We see securitized tokenized assets. And we see many other blockchain and types of innovations that are happening within the industry. All of those bring great promise for speed, cost, efficiency, reach to those, particularly in the unbanked world. The G20, of course, has very aggressive financial inclusion goals that they have set out for the industry, and we believe that these new innovations can actually play a very significant part in that. But underlying that, we have to make sure that not only are they secure, but that they're interoperable with not only the digital side, but also with traditional fiat currencies, because those are definitely not going away anytime soon. So while we're, as a platform provider, we're agnostic to whether or not we should do CBDCs or DeFi or tokenized assets, we absolutely are playing a role in providing experiments and working with various members of the community and the cooperative to understand what the security and other privacy pieces of that new innovation requires. And maybe just one quick stat, which is the Bank of England and BCG actually estimate that cross-border payments will increase from 150 trillion per year to 250 trillion per year by 2027. So it's critical that we get this right at the start.
Absolutely. Moving on to another central bank, the European Central Bank. Rafael, where do you see the trends? And maybe you can also comment, we heard already about CBDC is coming. We hear the ECB is also preparing for experiments and evaluating. Where do you see the opportunities and the trends in your area?
Good. You addressed 2 points. I will try to do it. One step back is who is the ECB? No? ECB and all my interventions today have 3 dimensions. No? They're starting from the central banking dimension, all the core components on our mission, starting for market infrastructure and payment systems, banknotes, also the monetary policy, but we also hold responsibilities in supervision. So it means all what we do is in terms of our actions vis-a-vis the commercial banks. And also when we are talking about central banking, we are a European institution. So it's not just a central bank, also we are representative of the spirit of these institutions that are building. Yesterday there were some remarks on regulators. So of course we have sympathy of what they do, and even actually we collaborate to this regulation, and we actively have contact with them. You are asking about what are the trends. There are, in our view, in all our discussions in this constellation I explained before, starting from European institutions up to our colleagues on the central banking, also with some of our suppliers, and also when we are customers of them, is cloud. It started from cloud, but we started from cloud. That was one of the elements that we wanted to consider, but was from a risk perspective. No? Can we sustain our operations neglecting this fact that is coming to us? That was one of the elements. Other of the elements, of course, is the disruption of AI and what it's doing. And AI, the multiple dimension of AI. Not necessarily on the ChatGPT that you are talking, but also on elements like machine learning. How can it be used in core components of our organization? Cyber defense comes without saying in all these elements, how we are measuring the risks in these scenarios. And there is, of course, the talent. And the talent is underpinning to all of that, in particular when we were talking either on this AI stream or when we are talking on the cloud dimension. Disruption of AI. I think you go and attend conferences, talk to suppliers, talk to central banks, talk to commercial banks, everyone is aware of what is happening. ChatGPT was a disruption. AI was not a new concept, but was the ability to start generating content. And what does it mean that for an organization like the ECB, that is monetary policy? So if one cannot expect that whatever is coming from that GPT is immediately published in the ECB website. Because of course this is unthinkable in our processes. No? And also not necessarily on the output of that, but also how it's generated, understanding what the logic is and how to use it. Of course it comes later on other elements like machine learning on the predictions in the monetary policy. I will not touch it because it's fairly standard for a data-driven organization like ours, where our decisions is based on the data that we ingest, compile, and produce for our statistics. So on that arena, of course, we are moving, we are exploring, we have implemented elements, and always with the objective of understanding the different dimensions that this complexity comes. And there we see there, just to list them, five dimensions that we are assessing. Is first, it's people, know how to use it, how can they consume it, what are the ethical concepts, ethical aspects around them, and also what are the guardrails established by that. Mm-hmm. But this is the people-driven individualities, but also what about the business? What is the impact in business? Comes, of course, a technology element. This represents technology in this group, but not necessarily is the most prominent one, because we see also the need of governance. And governance in the two steps, where with this one preparation with all the controls that we need to implement up to the decision-making. Decision-making is where do we invest, the classical investment decision, but also what are the consequences. And of course, we keep monitoring the ecosystem around us. We need to understand, and there is already several initiatives with my colleagues in business, is assessing what will be asset managers, what will be the disruption of AI for them, what will be on risk managers, the use of ChatGPT and the possible considerations that they will come. So it's a complex element or multi-dimensional problems, but ultimately all what we apply is about how do we consciously monitor what's going on, how we detect the risks that entails to that, and also what will be the decisions we make, a decision being from gaps that we have identified up to decisions that we need to make at the moment of implementing or not implementing.
Well, yeah, thank you very much for setting the scene and showing the various trends. We see different consumer behaviors. We see new products and services coming up. We see challenges and opportunities from new technologies. Let's move on to discuss a bit the risks, since we are on a cybersecurity conference here. And move on to Sergej. You have a chance also to introduce your company, as the others did, and maybe share with us a bit what requirements do you see coming from those institutions to the industry?
Sure, thank you very much for being here. I think just in this Palo Alto Networks quickly, we are leading cybersecurity vendor across network security, cloud security, DevOps, security, defense, and we have a very large footprint in the financial services, especially in the cloud security space, network security space, and so on. And therefore, I guess we see and feel as well the pulse of the regulation very, very early on. But since I have the only one security in the title, let me perhaps touch a bit on the way and the reason why cybersecurity for the financial sector is so important, right? Because many of us understand that our society is based on money, right? And trust in money is very important. But I think what is really difficult to understand is that the supply chain across the financial systems and the systemic risks around them is very, very complex. And we've heard some of that already today. And even for having worked 15 years in the bank, it's very difficult to grasp certain aspect where a small company, a small provider of credit cards, which can be compromised, can have a leading effect of the entire industry and potentially theoretically as well an economy. And therefore, I think it's very important that there's a very solid way as well for regulatory oversight, and as well systemic understanding on how risk might emerge across the system. Now, I guess having said that, what we see right now, and being already 20 years in this industry, when I started, we saw initially the initial cyber criminals trying to go after online banks, stealing credentials, trying to compromise smaller companies. And then there were some big events like the Bank of Bangladesh, where we understood, okay, the bank robberies are back, but now in a digital way, right? In the past, the customers were attacked, and I think since Bank of Bangladesh, and a couple of cases around that, we understand that the banks themselves and the entire supply chain around them is a target of the criminals. And the cyber criminals are always following the money there, where it's very easy to get that money. So they're very creative as well. And I think this is the challenge we have on the table right now. And since we see as well a lot of supply chain compromises right now, obviously this is one of the most emerging topics right now for the banks, just to understand, first of all, not just where supply chain risks might arise, but also how does it also affect the entire system, right? And therefore, we see a lot of collaboration between the central banks, obviously the regulatory aspects, which we discussed already yesterday a bit, around DORA, and around some other regulations are going to play a very important role, because we have to understand what will be the effect if a small technology provider is going to be hacked, right? And how can it be really affecting the entire industry? So I think that's an important aspect. And the second aspect is banks are potentially the earliest adapters of the most innovations out there. We've talked about blockchain, we've talked about payments, CDBCs, and this is great. Having worked 15 years there, it was great just to experiment with a lot of new technologies. But also we know that cyber criminals are also early adopters of such technologies. So if you invest in these new technologies, you have as well to invest at the same rate, at the same passion and weight as well into cybersecurity. And some of the topics we already mentioned, like cloud security and the cloud for banks, for insurance companies, is a very important topic right now. Most of the banks introduced cloud security postures already in the last few years. And now I think we see that there's a big traction towards understanding how to really do cloud security right. Because the cloud is working differently than typical on-premise systems or typical ways how IT was operated in the past. Out of the sudden, you have now to convince developers and software engineers how the cloud is going to be defined. We just ran, for instance, a study last year to understand where do we see with some of the largest companies out there the most end-of-life systems, and there were 80% of the systems were in the public cloud, not on-prem, right? So, and I think this is a journey we're going to see over the next decade, right? How can we partner between security, business, and IT departments? And I said business first because we see that most of these innovations now with large language models coming into the game are being absorbed by the business directly and not by the classical CTO or IT functions, right? So I think that's an important trend we see as well. And then obviously there are a lot of topics around AI and so on. Happy to touch on them as well as we speak about the risk further.
Who wants to jump on one topic?
So I'm happy to jump in here because part of what we just covered is the adoption or the regulatory trends that kind of come with it. And first off, because we're in the financial services sector, one of the big advantages I think that we have from other sectors is we have fraudsters. And why do I say that? Fraudsters force us to be better. Fraudsters find that the hole, and then we have to adapt and overcome it. So as an industry, we've had to get better. Earlier today, we had some panels that kind of talked about standards and then requirements. But as a company that operates in 210 countries, standards are often adopted by regulators, so the standard becomes the requirement. So I had a conversation with David Coe, and I'm happy to use David Coe because he uses this conversation I'm going to talk about when he speaks. But I went to visit David Coe, the director of the Cybersecurity Agency in Singapore, and he said, "Ron, we just came out with this new standard that we're going to take the businesses that are operating within Singapore." And I kind of did and he's like, "You're not excited?" I'm like, "David, you're going to tell me it's 80% of the stuff I'm already doing." It's like, yeah, it is 80% of the stuff that you're already doing. And then there's a 20% that's going to be new and different. Yeah, there's about 20% that's new and different. 20%, David, 200 times is actually fairly painful. So within the financial service sector, within the U.S., there's this thing called the Financial Service Sector Coordination Council. And as global companies, and we were facing standards and requirements, we created a framework that's called Profile. And what the beauty of Profile is, it's actually not its own standard. It's a standard that adapts other standards. If you're familiar with superheroes and comics, DC has this character called Amazo, who's sometimes a villain and sometimes a hero, but his superpower is he takes everybody's superpowers. So he touches Superman and now he's got Superman's powers, or touches Green Lantern and now he's got Green Lantern's powers and Superman's powers. So Profile is like Amazo in that, like, it's NIST, it adopted NIST, it adopted ISO, It's got GLBA in it. We were just looking at the cyber performance goals that were released by CISA last year. It's adopted that. So it through Profile or Amazo, if you're using that, and we keep working with Profile, it keeps eating or adapting or pulling in other frameworks. That way, when it comes to being a global company and you've got requirements that you have to show the various regulators, it's easier than if you're using NIST and then you got to translate into 27001. This is why this thing I do over here is the same thing I do over there. You just you remove all of that noise. That 20% noise, like you have so many people that are like hamsters that all they do is help you do that translating and tick boxing, that's compliance and not security. So just having the hamsters check boxes takes away from your resources to actually protect the organization. So the more that we can, I don't know why standards have to be this competitive thing where it's always got to be different. Everybody's got to have their own super 20%. As an infrastructure provider, and I know Cheri would say the same thing, we need to give regulators and the people that are in the different countries complete transparency to know that they can trust us to do the right thing. So the more transparent we can be to deliver that, the better we all are. But the translating and the people in the hamsters, that's mind-boggling.
Yeah, Cheryl, do you want to add?
So maybe I can take the baton from Ron around mandatory controls across the payments industry. Sergej, you raised Bank of Bangladesh. So for those of you in the room who don't know what Bank of Bangladesh was, in 2016, cyber criminals accessed the credentials within the Bank of Bangladesh through phishing attempts. And they accessed authorized credentials that gave access to the SWIFT infrastructure. So the SWIFT infrastructure inside of our house actually wasn't breached, but it was accessed via what looked like authorized credentials through the Bank of Bangladesh terminals. They were then able to send a very significant amount of money cross-border, and that actually was the impetus for industry to step up to create what is called the Customer Security Program, the SWIFT Customer Security Program, which has been in existence for 7 years now and is a set of 31 mandatory security controls that all of our customers must implement on their payment infrastructure that connects to the SWIFT environment. Those mandatory controls have increased. They started off around 22. They've now increased to 31. We bring in new controls every year. And they started off being simply as an attestation by the financial institution. So when I was a CISO at a bank, I had to attest. I don't know if you were the attester at Mastercard, but I had to attest, and I'll tell you that first year was tough. And then now that regime has evolved to external third-party auditors to validate the attestation and the processes by which the financial institutions go through in order to actually meet compliance. An additional part of that, though, a very important part of it, is transparency. So the transparency comes in with counterparty transparency. Financial institutions, as part of their third-party risk management programs, can go into our KYC, our Know Your Customer database, and actually look at the CSP attestations of their counterparties. So Bank A wants to know if Bank B is secure on their payment infrastructure. They could go in and see how they attested. If they didn't fully attest compliance, they can ring up that Bank B and say, I see you didn't actually fully meet the compliance requirements. Why is that? And when will you comply? And then they can make a decision if they want to continue to do business with that particular institution. So that's that part. Counterparty transparency is key. Another part of the transparency is the regulatory component. Regulators all have access to those attestations, so they also can use that as part of their supervisory responsibilities when they're overseeing financial institutions. I bring this up because I think it's a really important example of industry self-regulating. Of course, not without pressure from the central banks and other financial institutions, but it has significantly raised the bar across the payments infrastructure over the last 6 years, 7 years.
Well, thank you very much for sharing. And we'll come back to mitigations and learnings at the end of the discussion. But I would like to go back to risks and want to hear your judgment. When you look at the ecosystem in the financial sector, it's built by public infrastructure and private infrastructure, by legacy systems and a lot of innovation that is currently driven by central banks and others. New business models, new products, new services, but also we see very established models that have never been changed. We still have we still have checks, we still have all the different payment systems that once have been issued. Where do you see the largest risk coming from? From innovation, from legacy, in the private sector, in the public sector? What is your view on that?
Maybe I'll start. So when I think of risks, I want to go back to tie this to Sergej, one of your comments about trust in the payment system. And so I operate, a myriad of payment services as I described. And so I always think about how do we continue to support trust in the payment system? Because once you impact somebody's trust, then they question the validity, the integrity of that payment system. And so it's kind of across two parts. One is ensuring the integrity of the payments that are running through the system, and then also promoting reliability and availability of those payment systems so that they're always on and they're working as expected. So when I think about risks associated in the payment system, we talked a bit about last 2 days, a lot about security and cyber resiliency and keeping current on your infrastructure and your technology debt and everything that's required to make sure that your foundational infrastructure and your payment systems are really doing what they can do to prevent any sort of nefarious actors or nefarious infiltration of your payment system. So that's kind of one thing. And then secondly, on ensuring the availability and trust, it's about how can you continue to look at enhancing your payment systems so that they are responsive to your customer needs, but you're constantly also enhancing the resiliency capabilities of those payment systems. I mentioned we just launched FedNow. It's 24/7. It was designed cloud native, security built into it as it was being designed, a lot of the concepts that we've talked about over the last couple of days, but we do run a series of payment systems that run on different technologies that support our other payment services. And, there is a risk if you don't have good risk management processes in place that help identify where you need to continue to invest in enhancing, whether it's on the security side, the resiliency enhancements, versus the pool that you get to want to move your investments to things that are revenue generating. It's a balance that you have to really make sure that you've got a good risk management process in place and then a good prioritization process in place to make sure that you are prioritizing those efforts that are really the core foundational components of the trust in your payment systems. And so I feel like from a central bank perspective, we are never going to be on the bleeding edge of something, and we shouldn't be on the bleeding edge of some of the technologies, but we ought to be looking at how to be learning from others around us and incorporating those aspects into the payment services so that we can continue to innovate and enhance what we have. But I would just double down on the risk management processes to identify those risks so that you can appropriately prioritize your investments so that those investments are then supported by your governance bodies, and because there is business value in making sure that you are keeping your payment systems current on technology debt and security and resiliency. There is a business value to that that needs to be articulated to your governance groups to make sure that they understand it and support it.
I think the piece that I would add is I see the greatest risk being complacency and lack of imagination. The fraudsters develop and adapt and attack things. I think where complacency comes in is you think hey, I'm secure enough. No, you're never secure enough. You have to stay on top of what the trends are and make sure that you're keeping current with the basic security, make sure you're patched and all of that. But also, what is the latest fraud trends? What are the controls to mitigate the latest fraud trends? I need to incorporate that into my system now because someone's taken advantage of that somewhere. Why do I got to wait till they take advantage of that from me? It's great to learn from your mistakes. It's even better to learn from somebody else's. So let me adapt to that thing. And then as you're creating new products and solutions, secure by design. Having someone think about, well, how can someone take advantage of, victimize, create havoc in the new solution or system that we're deploying. So having that imagination's important and bringing that to the table so that security, what was the thing I picked up today was the time to think about the flavor of the cake isn't after you bake it. Right. So having someone in that early stage development and making sure that you have that voice at the table so that by the time they come up with a solution, you don't have to say, did you think about security? That becomes problematic. That leads to that security is the office of no, because you have no idea what the hell it is, and now you got to take them back to the drawing board. So,
perhaps just to offer as well a great analogy I've experienced last year in terms of how to do risk management. Had the pleasure to talk to the former chief scientist of NASA on their missions and how they drive risk management there. And the way how they do that is to understand the single point of failures. How many single point of failures do you have? I guess, if I remember correctly, for James Webb Telescope, it was 110 or so because it had to unfold and so on. And then based on that, trying to understand really which of them are you able to accept and which not. In our risk management, in our industry, if you're coming from operational cyber defense background, sounds really boring, right? But on the other hand, we understand we can't protect and defend everything, so we have to focus. And we have this notion of crown jewels we're trying to define across our companies. But do we understand which of these crown jewels are single point of failures? I'm not sure, right? So trying to understand that, and especially in industries like financial industry where you have a lot of systemic effects, could really help to define your guardrails and you focus as well on specific topics and innovations, because you can experiment with a lot of technologies. You'll never ever be able to secure all of them because you want to provide freedom, right? And I'm a big fan of security by design. I'm advocating for this every day. But on the other hand, focus is also very, very important. So proper risk management is potentially key.
I wanted to address my response with two dimensions. One, we all have IT departments, so we have our first lines of defense. So what we have discussed in protecting, establishing the minimum, the compliance, establishing the processes to identify the single point of failure that you are making referent, that has to come in a natural way through the process, no? There is one observation you have made in regard to the compliance. Yes, compliance, but for compliance. Compliance for us is the minimum set of requirements that you need to fulfill. So that should be the obvious ones. And most of the time in global players, like you, there are failures. And this is where, when we are talking systemic risks, is what we want to oversee, what we want to check if the minimum conditions are met. And this is why compliance has to be seen from this angle. And yesterday there was a panel discussing about that. So about how later on, how is the implementation? And I go to the second dimension. Of course, I go to the other one where we, for example, we supervise commercial banks. So when we go there, we have also the same regulations, but we see different implementations. We see different maturities. We see this heterogeneity on the items that or the different interpretations of this regulation, or even implementations. And this is the second dimension, is the how, and when we are talking about risks, it's not only identify the risk individual to the different entities that we are supervising, but also what is the knowledge sharing. And these elements, there are initiatives already on how this knowledge that is being built in this network can be spread in a manner protecting, of course, the weaknesses of every of the entities. No? So I've seen, as we have mentioned before, in innovation, I've seen in the VIS Innovation Hub some of our centers that are already developing in this direction on how they can do self-assessments and how in anonymous manner can be shared so you baseline yourself against the other ones. This is one example, but we could go also on the exercises of the regular exercises, how you can establish some kind of pattern guidelines or even cookbooks if you need to go at the time of mitigating these different risks. So it depends very much on which part of these, I've been talking on the first line of control, now I'm talking on the second line of control. It depends where you want to focus your attention, so these risks mitigation on risks processes need to be established. No?
Yeah.
Maybe just to add as well, yesterday in the regulatory panel, there was a couple of comments by, I think, EY and Airbus, who both said, you know, tone from the top is critical. And it seems pretty obvious at this stage of where we are in the security industry that tone from the top is critical. But I would ask everyone in the audience, you don't have to raise your hands, but how many of you in your corporate priorities actually, if you go look at those, 3 to 5 top corporate priorities is security and resilience in any of the words? And I can say, at least for my own organization, that security is actually in our DNA. It's our license to operate for our customers and our community. Providing enduring operational excellence, security, and resilience is our #1 corporate priority within my company. So I know that's not the norm for everyone, but even just starting to set that tone from the top is critical. It's the responsibility of everyone at Swift, not just the security team or the technology platform team, but literally everyone from finance to HR to make sure that we are secure and resilient for the community. So that's something that I really wanted to emphasize that because it came up yesterday, and I think it's underestimated. We've been saying it for a couple decades now, but how many of us actually have that in those corporate values and priorities?
So that's more a cultural thing than a regulatory thing, isn't it?
Absolutely.
And talking about regulation, isn't the financial sector over-regulated? And where's the fine line? Where do we need regulation that helps? And where should we work more on culture? Anyone want to comment on that?
Should I take this one because I'm not working in the industry anymore? I guess, you know, there's a great talk by Bruce Schneider on, you know, the incentives in the cybersecurity in general. We need incentives, right? I think, just to be clear, because cybersecurity is a topic which is where there's simply no incentives for companies, for technology providers, for even security providers in many cases. So I think we need to have incentives, but the question is just how do you set the incentives? So regulating the tech or regulating how to do certain things and not the outcomes is very dangerous. Because typically, historically, regulators were always late in the game, and especially now with the speed of digitalization, it's very hard just to keep up with everything. So I think we're facing a lot of regulations, and this was historically very important. On the other hand, now we need to find ways how we can really overcome that. And I think financial industry found already this way, so I would like just to refer back to the cyber risk profile as an excellent approach to that. And if you're not aware about that, I really encourage you to look this up, because I think today it creates a protocol, common language between the regulators, between the banks, and hopefully soon also for the vendors, because, you know, I'm at the end of these requirements, and I see, year by year, the question is growing, right? What we are doing in terms of our internal security. And the questions become more and more diverse. So it's very hard for us as well just to understand what are they really mean if they're talking about pen test. Is it red teaming or is it something else? So I think we need this common language and this common protocol, which is accepted in the industry. And I think the cyber risk profile, if I remember correctly, consolidates back 6,000, was it 6 or 3,000? It's a high number of requirements, up to 3,000, up to 300 requirements, which is great, right? It's like tenfold of the requirements you have to answer. So, and that's an amazing achievement. And I would be very, very happy if we can also reach this in Europe, because I think Europe is working already at this, but I see many more banks attending and driving that right now in the US.
Profile is adding DORA. To Profile this year, we'll add DORA to it as well, so.
Unfortunately, we run out of time, but I want to have a quick snapshot from you to give the let's say, your maxim on how you drive risk management in 3 sentences. What is what other industry can learn from the financial sector?
All right, real quickly. I would encourage you, so we talked a lot about cyber, but we haven't talked a lot about like resiliency and kind of thinking about recoverability and responding to cyber. I would encourage you to collaborate with your partners to look at that end to end and focus on communication, focus on decision rights, and focus on kind of who needs to be around the table when those things need to occur, and test and practice and discuss various scenarios.
Yeah, all of the best risk practices are, you should do those. One of the things that I'll bring up in this process is threat casting, which is, it's something we picked up from the U.S. Army and also the U.S. Secret Service. And it's, most security programs look at a 3 to 5 year, but with threat casting, we look at 10-year, and we bring in experts in across various fields, customers. And we think about what a future is to identify the risks that are associated with that future. There are flags that we set, and then we backcast from the threat cast to pick out mitigations for each flag. So with your standard risk program, you're going to keep up with the 3 to 5 years. If you add threat casting, you should be able to look 10 years.
Mm-hmm.
As you're building new technologies, especially in the financial services industry with new financial instruments and ways of moving value, don't forget to focus on the legacy infrastructure that may actually be riding on. So that's my comment.
Actually, from my side, 3 aspects very quickly. One of them is definitely staying in innovation. Whatever is disrupted, whatever is coming, you need to explore it. You need to understand, you need to see how, I'm talking technologies, but I'm also talking possible even trends that is happening. Test, resilience, more than patching. How can you ensure that business continuity is there? That is clear. And there is one element that we have not touched too much, but is how it's about the collaboration. How can you establish network of trust across the different participants in your industry? And then you can share experiences from the first line where you can immediately, if I suffer it, someone else may suffer it soon. That could be the third element I add.
So I guess I would split this question a bit to the operational level, just very quickly, and then the governance organizational level. The operational level, I would say the threat-led cyber defense was potentially the most important aspect where I saw, banks working together and really making an impact, disrupting all these operations out there. So encourage all the other industries as well to learn from that. Second, we've touched a bit on that one as organizational aspect. So we're talking about the board awareness and the tone from the board. I would just even stretch this goal further and say, let's ask the board, the supervisory board, to ask the business people, what is the value in security? It's like, my example to that is, if a CFO is going to the board and just, saying that they're having bad numbers right now, he's not getting all the tasks and going back to fix that, right? Everybody in the company is going to work on that. And now as a CISO, we are always in the situation. We report to the board, we get the task, we go back and have to fix that. And security is not just a cyber IT responsibility, it's a business responsibility. So let's try to turn this around. I think banks are really good in that. because they are already driving this separation of duties between IT and CISOs. They're engaging and piloted as well a lot of organizational aspects like having chief BISOs for different business areas. And I think Tiber is the last one I would mention. So having threat-led red teaming exercise as well, testing really defenses and not just going through the checklist and understanding is this control in place or not. Thank you.
Yeah, thank you very much for summarizing that, and thank you very much for sharing all your insights. You proved that we can trust in the financial sector. Thank you very much.